Are the Federal Reserve about to send crypto into a bear market? A very, very important meeting just happened. I'm going to talk about this in the video. And also a very interesting partnership between Kyber and Polygon. This could send both to the moon. This is going to be a very, very interesting macro episode. Cue the intro. First and foremost, I've upgraded my camera. I bought a Logitech Brio 4K and I quite like it. It's a lot more clear. It's 4K and it was definitely needed. I was actually using a Logitech, I think it was a 720 and did the job for a long time, but now took out some crypto profits, bought a nice sweet Brio, and now you can see my face in 4K. Beautiful. Continuing though, let's start with the video in regards to what Polygon and MATIC have done. So Kyber Network and have announced Polygon integration and liquidity program. So if you didn't know, Kyber Network is a liquidity protocol, very popular, it's done very well. Alongside ZRX. So what they've done in an announcement on Wednesday, Kyber Network said it will expand to the Polygon network on June the 30th and launch Rainmaker, the 2-month-old Kyber dynamic market maker protocol's first liquidity mining program on Polygon and Ethereum. Now, before continuing on, I do think it's a very, very smart move from Kyber Network in particular, because Polygon have shot to the moon already. And Kyber Network, although they've been around for quite a long time, are lagging behind. So there's a lot of heat, a lot of fire behind Polygon. So it makes sense to kind of integrate with them, provide liquidity and all sorts, because there's somewhat kind of bootstrapping in a way by integrating with Polygon. The Rainmaker program aims to bring more liquidity to Ethereum and Polygon-based decentralized finance ecosystems by incentivizing Kyber DMM liquidity providers with $30 million in rewards over 3 months. Polygon liquidity providers will receive $5 million, with the rest to be paid to Ethereum liquidity providers. Kyber Network spokesperson told CoinDesk in a Telegram chat. And the actual kind of technicals, a little bit more, they go into detail in this article. Polygon's adoption has exploded in recent months, with major DeFi protocols switching to, as I just mentioned earlier, DeFi protocols switching to layer 2 scaling solutions in a bid to bypass relatively higher fees and congestion on Ethereum. So as I said, it makes a lot of sense for Kyber Network to integrate with Polygon, as a lot of people are heading towards it. The ecosystem is growing at a staggering rate. So Kyber want a piece of that. They want to, of course, provide liquidity. So they're providing $30 million in liquidity, or not liquidity, in rewards to incentivize providing liquidity to Polygon. So great to see. We're going to check out the charts in a minute as well, what Kyber Network is saying and what MATIC are saying. I've covered MATIC quite a lot in the last few videos, so this is going to be a good one as well. Now, I mentioned the Federal Reserve. Could they be sending crypto into a bear market? NANI? And today it was a very interesting meeting. It was the FOMC press conference, and it was regarding interest rate decision as well. And what they decided essentially is they're gonna increase the interest rate in 2023. This, of course, the investing world does not want to hear. They want free money forever. So an increase in interest rates means what? It means loans becomes more expensive and business in general becomes more expensive. So the investing world does not like it, hence why it's created a downward pressure on all financial markets. So going into a little bit deeper, the S&P 500 ended in the red today after the Federal Reserve penciled in 2 interest rate hikes by the end of 2023 amid expectations for stronger growth and inflation. The S&P 500 fell 0.53% and the Dow was down 0.77% or 265 points, and the Nasdaq was down 0.24%. The Federal Reserve kept interest rates and monthly bond buying steady, though it signaled that it could hike rates sooner than previously expected. The Fed hiked its interest rate outlook in 2023 to 0.6% from previous projections of 0.1% in March. So it's gone up quite a lot, signaling two 0.25% rate hikes. In the Fed's summary of economic projection showed the move suggests the central bank is starting to take the pace of inflation more seriously. As I said, when the Fed announced that they want to increase the interest rate, this is creates a negative pressure on the market, hence why the financial markets have sold off, and also crypto is part of this world now as well, so this is why it's sold off as well. Now let's transition over to the charts and see what's going on with Bitcoin and the rest of the market. So in the last 2 weeks, it was looking quite bullish. We had a massive rebound from these lows of 30,000, and we got above 38,000, which was a crucial level. And we even broke 40,000, and it looked like it was going to carry on towards 46. Now there's a lot of selling going on. The main reason is going to be because of what the Fed have announced. But this key level is still holding. As I said in my Instagram video, follow me on that if you haven't. 38,000 is a very, very key level, as you can see. If this holds as support, if it does, then this is going to be extremely bullish. It will turn into support, and then it can push on towards 45,000. Of course, the main point is if it holds. If it doesn't hold, then of course it breaks this support and opens up to test the trend line as support. But if it does, then it's still not bad. It's still not like the end of the world, because it will still be in this area between the trend line and resistance. So it could go as low as 35 or 34. It could spike even lower than that, but it needs to stay above this trend line to remain bullish. If it breaks this level, then we have one last level of 32,000. After that, then I will retract my statement of saying the correction is over, and this may get very, very bloody.
You dare say that to me?
Same, of course, with the rest. The whole market essentially is feeling the pressure of what the Fed have done, because of course it's part of the financial markets. So with Ethereum, however, there isn't much support in terms of the weekly time frame. So it may drop down to either the wick support at 2200, or it may go all the way down to this support level of 2100, which is the only support level that we can see on the weekly time frame. If we go over to the daily time frame, there is actually some higher lows that were formed. So this is a bullish indication for sure. So there is a trend line in play right here. If you can hold this, of course, very bullish, and then you can build on that. If it breaks that, however, we've got that support at 2200 and then down to 2100. So this looks like a very, very strong support level. As you can see, many tests of this level. So I doubt it will go below that. If it does, that will be very, very bearish.
Yeah.
But let's hope that doesn't happen. Now let's move over to MATIC. As we mentioned that in the integration with Kyber Network. Now what I said was, when it was, I covered this, I think since this area over here, I said it's looking oversold. It's likely to start dropping and going lower and lower. I made the prediction, and now it's dropped all the way to the level that I said between 108 and 120. It tapped that, and the closer it got to that level, I said that it was more likely that it was going to reverse. All the sellers is probably left, and now it has reversed, and it's tapped the next level. So on the weekly, it's much more easier to see. Tap that target of 172, and now potentially because there's 2 weeks now, it could start to drop a bit further down below. So it needs to. This is a very important level. If it can hold this around 145, then we could potentially see another test of this level and maybe break it. If it doesn't hold, then we're gonna unfortunately head down towards that level once again, around 110 120, as we saw earlier. So Matic could go to the upside, it could drop. If it doesn't hold this support level, it could drop further down to the downside. So it's in a state of limbo at the moment. And we'll also cover Kyber Network. So looking at it from a weekly time frame, it's at a very, very important level, and that is this level of 187. You can see a key level. Actually, let me take it back. It's an important level. 186, 187. It's found support there. If it can hold this and break this resistance level, then bullish momentum will continue. But if it holds, gets rejected, then it may test that once again and break below down towards 165. So these three levels are very important with Kyber Network right now. So this bullish news regarding the integration doesn't seem to have affected it whatsoever. It came out literally in the last 2 days. To be fair, this daily candle is 10%, so it's pretty good. The weekly doesn't show it as much, but at the moment it needs to break past this level of $2.06, as you can see here, and that will open up the floor towards that next resistance level. I just noticed as well a very clear trend line that's in play. All the way from back here, you can see this trend line several tests and has now acted as resistance. So it's a bit of a weird rising wedge, quite deformed, I'll be honest. So potentially we could have a situation where it'll keep rising to the top, break through resistance and tap this resistance, this trend line, this counter trend line. That's a potential outcome. But on the weekly, this zone right here is from the weekly time frame. So it's going to be this is going to be a very telling sign as to what direction it wants to go, if it can break past this resistance level. After that, we have another important level around $2.40 and some change. So there's quite a lot of barriers in the way for Kyber Network. So it might just be too much for it to carry on going to the upside, and it may get pushed to the downside, testing one of these support levels. So we'll finish up by looking at the total market cap, and the good thing is that it's above 1.5 trillion. The bad thing is it got rejected from a key level at 1.7 trillion right here. 4 rejections of this level, and you can see also this is a key level. So I do think once we get past this level, and I mentioned this in the last video, once we get past this level, it's going to open up the floor towards 2 trillion and above. But at the moment, it's bouncing in between 1.3 and some change and 1.7 trillion dollars. There's about $300-ish billion consolidation region right here. So as long as we stay in this area, I think we're all good. Nothing too much to worry about. If we break below, then it's going to open up floor to a lot of losses and a lot of blood on streets. So just keep your eyes on this level. Once we break this level and close, it's going to be off to the moon, straight first class rocket ship to the moon. So that'll be it for this video. See you in the next one. Peace.